Today we're going to be talking about what all of the best crypto traders do and how they look at charts before they place their trades. Now, I've been very surprised that there are a lot of people who don't know this little bit more complex way to look at things. So I want to show you how to best view charts and also getting into some of the technical analysis and some of the basics of entering into the technical or the world of technical analysis. It is a massive, massive superpower to be able to understand in trading crypto as well as really anything else. If you are a short-term or want to be a short-term trader, this is definitely for you. So we're going to go over a whole bunch of different things as well as some of the indicators that I use personally to find the most success in my trades. So let's go on ahead. We'll dive right on in because we do have so much to get into today. First off, I want to show you, this is, if you are new to crypto, this is probably what you are used to seeing in terms of a chart, right? I mean, it's helpful, shows you the price went up, that's good. But with line charts, it's very difficult because what you can see is it only gives you one price as of a certain time, which can be a little confusing because, you know, we can see that price was 124,000 on the 6th of October, but it wasn't only 124,000 on the 6th of October, right? I mean, there's a whole bunch of other stuff that happened here. This is just the closing price. Now, what you can see right here directly on CoinMarketCap is they do have the candles. This is very, very helpful and is great to show kind of some of the changes that we have here. But I'm actually going to go in and show you on TradingView because TradingView is very, very helpful. If you're not familiar with TradingView, you definitely should get familiar. This is generally where almost everybody who is seriously into trading is going to be using and analyzing their trades through is TradingView. So we've got a whole bunch of different things that we're going to be taking a look at today and kind of how they work. First, let's start with the basics of the candles. Now, if you're familiar with trading, of course, you already know this, but the structure of a candle is quite important to understand. So as I was mentioning in the line chart, you only get the closing price. Well, here you get the open, the high, the low, and the close. So here you can see that this top part of the candle was the open price. This bottom part of the candle was the closing price. The top wick is the high and the bottom wick is the low. So it's a lot more expressive in terms of telling you what price did. So we can see here on the 10th of October, we would have just seen that Bitcoin ended at 112,000 and the prior day it ended at 121,000. Now that in itself is very expressive, but it doesn't let you know that in that same day, it went down as low as 103,000, which is an insane move for something like this. So it's very, very important to see this type of stuff. Now, the reason why that this is helpful to understand is because what it starts to show you is a little bit more in terms of expression as far as support and resistance levels. Now, support and resistance is very important to understand, and I actually stand by the fact that if you only trade off of support and resistance, you're probably going to do all right. Now, again, there are a whole bunch of other things and other metrics and indicators and whatnot that you can use to help you get a little bit more clarity here. But for, kind of the basics, support and resistance is incredibly helpful in terms of helping you find out kind of where you could be entering or exiting your trades. Now, the really important piece to understand with support and resistance is it's purely psychological, right? People always want to get a good buy and people always want to get a good sell. And so that is kind of why we see support and resistance play such a major role. So the best way to start tracking support and resistance is you can see on TradingView, there's a whole bunch of lines here. I'm going to use the horizontal line because that is kind of one of the most basic and easy ways to track support and resistance. But what you're going to try to do is you're going to try and find places where you can see that the line connects with a whole bunch of different candles or wicks. So as you can see in this particular position, you can see that on this point in time, there's a bunch of interaction with this level of support in this range. You could also see there was interaction here. There was also interaction to the downside here. So this turned into a bit of a resistance instead of a support. You could also see similar types of things here. So what we can see is that this line is generally a pretty good indication that at kind of this 117,000 range for Bitcoin, it's probably going to be a pretty good place to either buy or sell depending on which side of the line that we're on. So you can see here in this range, people were really buying a lot on this line because it was a strong level of support. Well, When we flip below it, like in here, you can see that we saw a push back up to this side, but we saw that this is a strong level where people like to buy, or I guess sell, when we're below it. So we did see price reject off of this level of resistance, similar here, because people know that this is a high level of liquidity, or this is a liquidity zone where a lot of trading is going to be going on. When we're above it, people are going to want to be buying at this level. When we're below it, people are going to want to be selling at this level. Now, of course, you can move above and below it, as we have seen. It is not this immutable wall that you cannot get through, but it does, hopefully, as you can see, it does provide some indication at where we might see price stop out. It's not a guarantee, but it is potentially an indication. So that is kind of the key with support and resistances. There are also other things that you can use to kind of help be a little bit more expressive. So for example, you might be able to see something on the chart here. This is called the RSI. It is the relative strength index. I almost forgot what that was for a second, but this is actually really helpful because it helps you determine how strong price is. Now, if price is very strong, perhaps too strong, we might be in a position where we start to see a pullback. If price is weak, perhaps too weak, we might be in a position where we see a turnaround. Now, before we get into this, this is a time-based frame. So we can see here, I'm looking at the daily candles. So this is the total activity within a certain day. Now, if you go, you can actually change this. So you could say like certain activity within an hour, certain activity within 4 hours, 15 minutes. I mean, you could even go down to 1 second, which is crazy. But let's go and look at something shorter like the hour time frame. Now, what you can generally see is, like, for example, on the daily, if we go back, this level of resistance was actually quite strong on the daily, right? So we might know that this is a very strong level of macro resistance. But if we go back down to the hourly, we might see support and resistance levels that show up that are going to be a little bit more instructive, potentially at a smaller or a shorter time frame. So for example, we could see on the daily, nothing really was sticking out to us here, but we might be able to see a point at which, like, this could be a level of support or resistance. So let's go on ahead, we'll put a line in here, and maybe we'll give it a different color. Let's make it green. So now you could see that this might actually be a level of support and resistance. Because why? Well, you can see there's a lot of interaction here, a lot of interaction here. There's interaction here from a resistance perspective. So there's definitely a lot of liquidity in this range. We also can see on this massive candle where we saw that massive like liquidity wash the other day, this is actually where price closed. The bulls were trying to get price back above this level, ultimately could not hold it, but we could see that there's a lot of, even on the subsequent candle, we could see a similar type of thing. So this is very, very helpful to understand. Now, looking at the RSI, you could see this also works on time frames as well. So you could see in this particular range, we saw RSI get way, way, way oversold, right? Meaning that this is potentially a good time to buy. We also could see here, again, also oversold again. So what we could see is if we would have bought here when it was oversold, and then we held it, wait till we got to overbought, well, this is higher than when this was lower. Now, this is not always the case. RSI is not a price thing. It is a strength relative to what it's seeing in the chart. So right now, price was very, very weak compared to what it was, let's say, in this range, which I think kind of goes without saying. But maybe is somewhat less obvious. Price was weaker here than when we saw price here. Now again, price is actually lower at this point in time, but it wasn't as weak from an RSI perspective. And this is very important to understand when certain things might be oversold. That does not mean it's the bottom, but it does mean that it might be oversold. Generally, the RSI is a very strong indicator of this type of thing. Now, the other thing that I use also is called the Ballinger bands. Now, the Ballinger bands are very helpful, again, for another reason, because you can see this is giving you kind of a cloud around price. This is giving you kind of like the expected price based on, again, kind of like a smoothing average that looks at historical rates. And so what it does is it shows you like this is what, kind of the most likely outcome of price would be. And then here's kind of like the upper reasonable limit, and here's kind of the lower reasonable limit. When you start to see things pop out of the Bollinger Bands like this, coupled with the fact that you're seeing RSI showing oversold, this could be a very, very strong time to buy. For example, if you were able to buy, let's just say you didn't even buy at the very bottom. Let's just say you were able to buy right here. Let me get an arrow or something that we can use. Here we go. Let's just say you were able to buy right here. You're not even at the very bottom, but what it showed you is that you are wildly outside the Bollinger Band as well as massively oversold on the RSI. This could have been a good time to buy, and then of course you could have sold right back when we pulled into the Bollinger Bands. So that we would have pulled into the Bollinger Bands, let's just say probably at this point in time. So you would have been able to enter, let's say at 105, 106,000, and then you would have been able to get out somewhere here around 112,000. That's a great way to trade, particularly if you are trading leverage. Now, of course, you need to be very, very careful if you're trading leverage in this type of volatile event, just because you don't really know where the bottom is. But if you were, let's say, to trade low leverage here, this could have been a relatively decent quick gain here. Again, this is only on the hourly candle, so within the span of about 2 hours, you could have made a decent sized gain here. So again, hopefully this goes to show you some kind of helpful tips of how to look at various charts. Again, the longer time frame you get, so like for example, let's get to the daily chart. The longer time frame you get, the more reliable certain indicators might be. So for example, you could see here, this was outside of the Bollinger Band and this was outside of the Bollinger Band. It's a much clearer indication. Even when we saw this massive liquidation event, we did see it go outside of the Bollinger Band, but it really actually hasn't been outside of the Bollinger Band any other time, even though we have seen a major move to the downside. One thing that I have noticed myself over some time is if you're ever trading on the daily and you look for a confluence of both oversold on the RSI as well as closing outside of the Bollinger Bands, that's generally a pretty nice time to enter into a trade. Now, if you see also similarly closing outside of the Bollinger Bands as well as overbought, you could see this as another similar time to exit a trade. For example, if you would have traded based only on this, now you would have only found, I think, one trade over the span of like 3 months, but what you would have seen is you would have had an entry price of about $84,000, which again was not the bottom, but you would have had an entry price of $84,000 and you would have had an exit price of about $120,000 roughly, maybe even going all the way up to $123,000. So hopefully you can see that on a macro time scale, it gets more and more reliable the further you get. So this is something that I really do like to use for guidance. And sometimes I will trade off of, again, this is not financial advice. You need to make your own decisions because indicators are not exactly perfect and cannot indicate future outcomes, because if they did, well, then everybody would use them, right? So I mean, hopefully that's somewhat self-evident to you. But overall, this is a lot of the things that I try to use to help give me a better idea. Now, I also do have another indicator. Let me get rid of the RSI so I can show you the other indicator that I do use. It is called the Crypto Crusaders. Now, I had to change to a new Bitcoin chart. You can see, obviously, I've got a lot more stuff going on here, but I had to change to a new chart because the other thing you'll need to understand about TradingView is I was using this one, which is just a general price indicator. Here I'm using the one coming specifically from Coinbase because it has volume data and price data. Now, with the indicator that I'm using, the Crusader signals, it does actually work very, very well using price data. And so that's why I made that change. Also, one thing to note, it works best on the 15-minute candles. That's where it gives you kind of the most interesting expression with price. So what you could see here on the Crusader signals is on the Bitcoin 15-minute candles, you can see when we saw this massive liquidation event on Friday, it did throw off a buy indicator. Since then, we have not seen a sell indicator. We've actually seen yet another buy indicator when we went down and hit 110,000 just a couple hours ago. Now, we have seen price start to pump since then, but we did get a third buy strength indicator, which is of course good to see. So what this is showing us is we are now in a position where it's nice to be buying, and we're getting more and more convincing signals that this is a good time to buy. Now, of course, it might not be the bottom. As you can see here, a buy strength signal came off at about $121,000, and we're now down at about 112. So you would be in loss currently if you had bought here, but this is not meant to be like you buy your entire position here. It's like you buy a little bit on one maybe buy a little bit more on 2, buy a little bit more on 3, on and on and on all the way down. So, but you can see here as price goes up, you can see the sell strength indicator rising. So if you would have bought here at the about 112,000 or 110,000, you would have had a sell indicator at 110, 116, and then another one here at 124, which is very, very close to the absolute top here. So as you can see, it's a very, very nice indicator and gives you some pretty good, kind of sense of where to buy and where to sell. Again, nothing can ever be completely and totally right, but I have found that directionally it is very, very good. So if you are interested, I of course do have that link in the description below to the Crusader signals if you are wanting to take a look. I do also have links to both BTCC, I guess all three of BTCC, BloFin, and Weex. I personally use Weex to trade primarily, but BTCC does have a fantastic referral offer. If you were just interested in wanting to test things out, you don't actually even want to trade with real money because you don't know what you're doing. All of them have very, very great demo trading platforms, so you can go in, you can trade with fake money, and you don't need to worry about potentially losing any of your own, but you still can capture these really good deposit bonuses, these trading bonuses, all of the things above if you get signed up below using my exclusive affiliate link. So feel free to do that if you are interested. Like I said, you do not have to trade. You can just do demo trading, see how it goes, and then kind of jump into real trading whenever you are potentially feeling comfortable there. So overall, hopefully you found the information in this video useful. I think it is absolutely crucial to know at least a little bit of technical analysis if you're wanting to participate in the crypto market. So I think that this is actually a very, very important video. Hopefully you feel the same. If you do, of course, please do drop that in the comment section below. I'd love to hear your thoughts and hear kind of your reactions to some of the things I went over. Do you have any questions? Do you want me to clarify anything more? Anything like that? I would love to hear all of it. And if you did find the information in this video useful, of course, you know what to do. It does really help me out when you like, subscribe, comment, all that type of good stuff. It does continue to push it further in the algorithm. So thank you all so much for tuning in, and we'll see you in the next one.